despite all of these crashes, the market always recovered. That's why the stock market will always be a good investment. Long-term buyers never sell. Non-discretionary goods will be bought even when budgets tighten. So this ran up 180% during COVID, but the SPY went down 35%. All right, these are the income sources right here. Income sources by amount, by country. They're in over 20 countries, so they're gonna be straight. Disciplined diamond hands back with another video. Today I'm finna go over 3 disciplined diamond hand investments you can make and hold for the market uncertainty and for really a lifetime. Honestly, first thing first, I'm not a financial advisor. Long-term buyers never sell, and this is why SPY is safe. SPY is safe because it follows this index, the S&P 500 index. What is the S&P 500 index, you might ask? Well, the S&P 500 index is an index that holds the top 500 public companies in the U.S. And the top 500 companies in the U.S. comprise of Nvidia, Microsoft, Apple, Google, Amazon, Facebook, Tesla, Chase, Walmart, Amazon, Mastercard, Johnson & Johnson, Home Depot. I can't name all of them, but you can look at them, and then you can also do the same thing I'm doing as well by typing in TradingView and going to TradingView and doing this. Like one of my best strategies have been investing in these companies when they get below the 30 RSI, like on a weekly or monthly time frame. And that's what I've been promoting on this channel, just because these are great assets, and when they become undervalued, they really be taking off. So what we're going to do is we're going to go over 2 stocks in the S&P 500 today that are going to take off very soon. But yeah, look, this is why long-term holders never sell, because throughout all the market corrections, pullbacks and crashes, it still remain bullish, you know. If we check this out, look, price started here at what, 273. It went up all the way to a high of 6,695. See, this right here alone is over 200,000% return, over 200K% return despite all of these crashes. You feel me? So it's like, despite all of these crashes, the market always recovered. That's why the stock market will always be a good investment. But here's the thing though, they control you and fearmonger you out of your position because the news. So it's like people be selling their stocks because the news, fear-mongering people. Like whatever you fear will control you. Like people fear public speaking. If you fear public speaking, it's going to control you in public, because in public you won't speak. So if they fearing you about your investments, that fear is going to control you and make you lose your investments when it's still going to be good. But we're going to go over some good companies today that are at some demand zones. Let's see. Long-term buyers, non-discretionary goods will be bought even when budgets tighten. So first thing first, we're going to go over Clorox and why their revenue is going to continuously grow and why they should bounce here. First, we're going to go over technicals real quick. Like, we're going to start on the weekly time frame, because on the weekly time frame, I was honestly liking them right here because they was oversold, reaching this demand area. And as we can see, what always happens when they're oversold, it goes up. And what happens when they get to the demand area, it also goes up. During the COVID pandemic, it had went up over 110%. So it's pandemic proof. In a pandemic, this is going to be your proof and your safety option, you feel me? Despite the market pulling back, what, over 30%, Clorox kept doing its thing. Let's check this out. See, the market pulled back. Let's see. The market pulled back 35% during COVID. Clorox ran up 110%. UPS ran up 180% during COVID, but the SPY went down 35%. So these are 2 good things to hold against SPY, you know, or within SPY, or it just shows you once it's undervalued, it does have potential to recover. Let's check over these earnings and revenue just to get off the charts. Let's go on the annual because we're long-term investors. From a long-term standpoint, they consistently beat their earnings per share from 2020 to 2025, which is good. And it's growing. The profit for their earnings is growing. Their revenue is growing. It's gonna be a little shaky, but it's growing long term. That's what we like to see, long-term growth. These are the sectors they're getting, well, these are the sources that they get paid from. These are the revenue that they're bringing in. It's about a country. Also, if you want to see this, just do the same thing I'm doing, TradingView. Go in here. Everything I see, you can see as well. All right. Also, in order to add, I think I went over this, to add the indicators. Just add the RSI, Relative Strength Index. Click on it, and then add the EMA. Click on it. Click on it right there. Go to it over here. Make sure your inputs is the same. Screenshot this. Screenshot. Go to your RSI. Screenshot. Make sure all is the same. Screenshot. And yeah, you will see the same levels, and you will be able to watch my older videos to understand these levels more. Let's go over the fundamentals. Yep, let's do that. Clorox, let's see. Clorox have a good net margin. It's above 10%. Their debt to equity is high, but they're still in control of their debt. You feel me? And yeah, long term, their debt is still healthy. Their dividend yield is 4%, which is, you know, good. Free cash flow is increasing, which is great. Return on equity is great as well. Like, they're profitable. Clorox is a profitable company, and they're growing to be more profitable. And the demand for Clorox products will, I mean, I think the world will only be getting cleaner, you feel me? So what does that mean? But then again, it'll be more suppliers of cleaning products. So as long as they continue to innovate, they're gonna be great. The news, yeah, go over the most recent news. I don't think there's no major really headline that's negatively affecting Clorox. Yeah, it's nothing to fearmonger about Clorox, man, because like, as you can tell, they're resilient during market crashes and corrections and pandemics. Next we got is UPS. Why do I like UPS from a technical standpoint? Well, first thing first, they've been holding this demand area for over the past decade. I also missed this with Clorox. On the monthly time frame, they've been holding this 200 EMA. And my rule of thumb every time I invest in something is I never risk more than 30%. And when I was looking at Clorox, I was like, man, I don't see Clorox falling 30%. I really see it holding where it's at and bouncing here. I don't see it falling 30% below the 200 EMA because they've been holding the 200 EMA since 1985. So, yeah, but the thing is, my max risk is always 30%, but I'm always searching for more. And honestly, sometimes my max risk be 20% because it's like, bro, if you break this right here, now I already know you flushing. I already know you flushing here. So it's like, I don't even need a stop loss that wide. But then again, yeah, let's get it. Back to UPS. It's at this demand zone. It's holding up. Let's circle some technicals. Every time it becomes oversold, you see what happens. You don't see what happened this time, but you see what happened last time. Yeah, okay, you also see what happens every time it gets to this demand area. You know, it reacts, very reactive. We should get some wicks. Let's see, it's the end of the month now. So this is how the monthly candle about to close. Let's see, we're gonna see. Okay, yeah, next is earnings and revenue. I got kind of lost. Earnings and revenue. Let's go on an annual just because, let me make sure I don't know everything. Yeah. I ain't gonna lie, I did have their earnings up on their earnings presentation, but it was making the video too long, so I took that out. But also for the earnings, I mean, the earnings, like UPS missed earnings a little, but it wasn't detrimental, and they still have long-term, outlooks and obligations to continue to make the business profitable and continue growing in the healthcare sector. And so it's like, yeah, they kind of missed, but long-term, they're still working on great things to grow the company, so that's good as well. But yeah, let's go over, did I go over this? No. Okay, it's getting a little rocky, which is cool. Trade tariffs, shit, things been going on. But long term, they're expected to grow. And if we see they was able to consistently beat what they estimated. So yeah, they not lying about their numbers. Their revenue is going to, consistently grow, because think about it. Who's going to stop ordering online, bruh? You gonna stop ordering? All right, these are the income sources right here. Income sources by amount, by country. Yeah, they're in over 20 countries, so they're gonna be straight. But yeah, let's go over their fundamentals real quick. I like UPS fundamentals a little more than, well, I ain't gonna say that. But let's go over their fundamentals. They RSI is low, which is great on the 1 weekly time frame. Their net margin for the trailing 12 months, this last 12 months, is 6.36%. Their debt to equity for the fiscal year, 1.53. Dividend yield, 7.93, which is great. Free cash flow is bad. Free cash flow is bad, but it's going to recover. They got long-term plans. Return on equity is great. Current ratio is great. Yeah. But those are two great stocks to keep your eyes on during market corrections and pullbacks. And I appreciate y'all for watching. Follow along, do what I do, pull up your charts. Start investing a little bit in SPY, like just hold it. You'll start to see your investment grow. Like if anything, just put $10 in VOO and check it in 2 months, and then let that, don't check it in 2 months, check it in 1 year, and let that determine if you want to invest. And then do that for like 3 years straight, because like you're gonna see it grow, and you're gonna be like, oh, if I put more money in it, it's gonna grow. Why grow it at a 5% rate when you can grow it at 10, 12%? Once you grow it at that 10%, you'll start growing it more. You'll start growing it at 30% a year, 50% a year. So I say just start investing, just because these are the pros and these are the cons. You feel me? The pros outweigh the cons.